Okay, so this is just a bonus elite room session. I'm going to be in here every day this week. Doing some Q&A, reviewing charts, going over things, talking about a lot of stuff. And I already have quite a few questions in the elite room, which will be fantastic. So we can go through these. One question was about last Friday. Trader had a hard time on the NASDAQ, and total props to them for being willing to share their chart. A lot of traders want to look good versus make money. Best way to make money is to put it out there so that way someone can help you and give you some tips on it. Okay, so I really encourage the more chart sharing you can do, the better off you're going to be. The number one person who has shared charts with me and asked me questions that has annoyed me and annoyed me and annoyed me and has never been afraid to annoy me more has been Lori Hell. And she is an awesome trader, and it's because she asked lots of questions, and I appreciate it. And she, yes, she loves doing more with me. She's like a big sister. So, but anyways, so let's check out this chart from Friday. I mean, sometimes we got all good, sometimes we got bad, and let's, I mean, you got to look at everything. You can't just look at the stuff that's all pretty all the time, right? Um, so the trader was looking at this, trading Nasdaq, had a great short entry over here, and missed it out. Probably, just got to their computer a little bit afterwards, whatever. Or, just didn't hit the button at the right time, or just it all happens, right? So, missed entries, can't really do anything about them. They were there. We're always going to miss entries. It's just like trying to go out and be like, man, I missed that fish in the sea. Well, yeah, and a million others. So there's tons of fish in the sea. There's tons of entries on charts. And, it sucks when we miss some of the great ones, but either way, that's how it happens. Okay? Um, and if we go down right here and look at this one, so right here, one of the things that Trader mentioned is that they're using a 20 tick trailing stop. And one of the things that I want to highly recommend for you, okay, is never set your stops based on your account size. And they mentioned, well, I can't, afford to risk more than, 20 ticks. And I don't even know if that was more than 20 ticks. I haven't added it up. But the biggest thing I want to point out to you is like the market is not going to move according to your stop size. Okay, if you're like, I can risk 20 ticks, so I'm going to put it here, or I can risk 5 ticks or 10 ticks or whatever. Um, that is not the way to trade. Your stops need to be based on the market and the chart. And if you can't do that, there are things you can do. Like this, for instance, is a NASDAQ chart. So you can cut those ticks in half, okay, by trading the Nadex spreads, the near the market, again, near the market daily Nadex spreads, and they'll mirror the market, okay? So that is a way to literally cut and use the master spread, the widest spread they got. And that is a really good way for you to be able to, instead of trading 20 bucks a point on Nasdaq, you're trading 10 bucks a point on Nasdaq. And so now you can trade with a little more confidence, because I mean, if you're over risking, you're going to mess up. You're going to trade poorly. Like all of us, 100%, everybody is going to trade poorly if we do that. Okay? So please do not set your stop based on your account size. Set your stop based on the chart. And if your account size is not big enough for that stop, then find either a different instrument or a different derivative of that instrument that you can trade. Such as maybe if you're trading Russell at $10 a tick, which is going to be $5 a tick in July, but right now it's $10 a tick, then, NASDAQ is 5 a tick or $20 a point. So, and if you use a NASDAQ spread, it's $10 a point because it ticks in 0.1 at $1 a tick. So that is a really simple way to be able to help you out with your risk management and let you still follow your trades. Okay? And on a spread, by the way, whether I'm up $10 or not, if it hits like my 10 tick thing, I, say my profit goal is 10 ticks. Maybe it's 20, maybe it's 50, whatever it is. If it hits that, I'm out. I'm not waiting on the spread price to get there. I'm gonna get out. Okay? So maybe I make 7, maybe I make 12, whatever, but I'm gonna get out of the trade. Okay, does that make sense on the risk? Because it's probably one of the number one mistakes I see traders make is they put their stop based on what they can afford to risk. Oh yeah, they already moved it over to $5 a tick. It's just not technically on CME yet. So it'll be on CME in July, which means you no longer need an ICE subscription. Yes, you're right. Okay, then we'll say S&P 500, which is 12.50 a tick, or $50 a point. So you could hop on over to Nasdaq or to Nadex and trade again the daily near the market spreads, and you could drop that down to $10 a point. Okay, Jason asks a great question. Do you not move your stops to lessen your risk as the trade becomes profitable? Yes, I'm all about trailing my stops. Not only to lessen my risk, but to ideally lock in profits. So definitely, I do trail it, but I trail it objectively, not based on just a number of ticks. So I have something on the chart telling me I need to get out, besides my P&L. Because if you're trading based on your P&L, you're going to have a rough time. And on my radio show, I actually showed you how to trade with really low risk this morning. And I don't have to worry about the P&L. So on John's chart, I would actually be using the predictor lines on John. If I was just trading John's chart the way it's set up at the moment, these predictor arrows would be my stops and my trailing stops. Now this is a C's chart, which means it's a scalping chart primarily. And I would also add the C's stars indicator to the chart. Just right click and find the little indicator that says stars under Apex Diagnostic, because that'll really help you identify the setups you're looking for. But right here now, me and Lori have always been in contention on this, and she wants to keep it really simple. I say it's the same thing. I think she calls them swings. I call them all elevators, but whatever. Um, that's where C's is swings and elevators and all that stuff. But yeah, I don't think so. Yeah, whatever. Okay, so I don't care if there's 1 bar or if there's 3 bars. Like when the market breaks out of a low or a high, you're usually going to get some ticks. Okay, so like right there, that's an entry. And the trader didn't take it because they said, well, I want to make sure it cleared settlement. I mean, technically, it actually was clearing settlement. They said, well, buy more. And I'm like, hey, you're overthinking it, okay? So one of the mistakes was just not taking this trade, okay? Now on this C's trade right here, I don't quite know how far that went up, but I mean, it shouldn't have been more than 9 ticks. So you should have had at least a 10 tick initial stop. I believe that's Lori's normal rules. Again, I prefer to use predictor arrows, give me a little more room, but for that 1-to-1 risk reward, if you would have had a 10 tick initial stop on that entry, I mean, a lot of times she'll use 5 or whatever, but consider like how far can the bar go before it reverses? The bar basically can go, 9 ticks in the other direction, and that 10th tick is gonna flip and cause another bar. Okay, so just a couple thoughts on different ways to trade. C's. I'm sure Lori has her input as well and how she does it. Lori rocks it. Not trying to take away anything from her. I'm just giving you my 2 cents. So is I would put it above. You could put what's called a bar range indicator on here, and it'll actually show you where a new bar would be formed. Okay. Um, and so like here, let me grab this. Just I got a simple 10-minute chart hanging out over here, and let me add it on. Let's see. Okay, is it the star line? Is that the star? Because I have it just added to everything. The star line, is that what we have it called right now? Um, and then the other one is, well, Lori's answering that. Let's see, bar range indicator. She can't see my chart because she has like 5,000 charts up on her 25 windows. Pretty sure it's star line. See, what's cool about this is, is it not public yet? I thought it was public. Well, I like it the way it is. So, anyways, we could stick it out there. It could be a version 1. Anyways, oh no, not the star. I'm talking about like the C stars, not the star line, like the C stars. You know, like the stars. These things right here. They're drawing. Okay, so all right, that's how we do it. All right, I was wondering. I was like, wait a minute. Okay, so if we go into order prints, okay, so I just got up a 10-tick chart right now, and institutional order prints. Okay, so I just right-clicked on the chart, clicked indicators, double-clicked on institutional order prints, and you can do this on any chart you have. Okay, and this is just to get the stars on there. Turn off everything except momentum, and to the color bars transparent. So you have all this stuff right here, or if you just want to make it really simple, let's go over here, and I'm going to go to templates. Problem is we need to add that to your C's template. So we should update that template. Or you already did and you're ahead of the game and I'm just wasting everybody's time. Okay. Look at you. C's, stars. And she's already on it. See? Lori wins. Okay. Um, anyway, so if you open the C's stars template, then you'll get the stars up on there. Okay? Which are very helpful for identifying C trades. So one lesson is if you miss a trade, don't worry about it. That happens. 2 is over here. He had a trade, but he waited because he wanted it to break settlement. And I understand that. By the way, if you don't have the MVP predictor, then I'm definitely going to use like the swing low. Okay? So like a few ticks below that. Or this is the low of the day. You could even use that. But I'm going to use an objective level on the chart. Okay, so right there, that was the entry, and the trade. This would be what we would call, I believe, a swing entry. So right there, yeah. her swing entry. Yes, a swing entry. So, like I said, I call them all elevators. But swing entry means more than one bar in between. It's like right there, an elevator, we have one pullback. That's an elevator. A few, and then coming back, that's a swing. Don't confuse the peeps. Whatever. It pulls back, it breaks out. It's a trade. Done. See, that's simple. But anyways, so right there had a swing entry and was profitable, but waited till it broke settlement. So this is I missed. I'm waiting on the trade for something, and so I'm going to enter late, and that's why the trade lost. This one is I missed on like this trade was missed. It was a great trade, no entry. This trade was missed, but entered late due to overthinking it. It can oscillate. Understand one thing is settlement is a strong level, but it's not necessarily the level that it just sits on. Okay? It's a level that the market will oscillate, like really likes to oscillate around. So don't feel like it's just going to hit settlement and just bounce right off. Okay? And you can go back on your charts and you can look and you can see the same thing. Go back and look on them and see if does it oscillate around settlement or does it stop at settlement. And that may give you a little more confidence because I know that's part of the issue too, right? It's like I don't want to get it and it stop and just go right against me because that always bites. So go back and look at it, see how it oscillates around settlement. And that'll give you more confidence. Go, hey, I can get this and a few more ticks with just a couple bars above, and then even if it pulls back. So that trade we missed. That trade we entered late. This trade we used too tight of a stop. Which again, if too tight, just go down to NASDAQ spreads. Super
New
simple, near the market. Contracts. Like right over here. I'm choosing NASDAQ. Still got 5 more of those left on there. Took 5 off for a few $100. And so I go, okay, I'm going to choose NASDAQ. I'm going to choose near the market, and I'm going to choose daily, okay? So again, NASDAQ, US Tech 100, near the market, which means give me trades that are trading pretty close to where the market is trading. And daily contracts, I went over this last Tuesday with Jason. There's a video under THT webinars that says, why am I losing on my Nadex spreads? And I explained exactly why and why you don't want to choose the cheaper, narrower spread. Okay? Big mistake that traders make. Go back and watch that video. It'll open your eyes completely to Nadex spreads. Okay? So either you can just trust me that you want the near the market daily, or if you think you want to put up less money and you want that narrower spread, if you think that's a good idea, go back and watch the THT video on why am I losing on Nadex spreads. Okay? So let's say you had a short over here. You would want a relatively close, and I would want even, like I really want a really close proximity if I'm scalping. Like it has to be tight. If it's not tight, it's not going to work for me. Okay? And especially on NASDAQ. All right? So I would probably be putting up this contract right here. Let's say I go short this contract with like 0 premium, 1 premium, 0 proximity. Putting up $427. Okay? And some people are like, well, I'm not going to risk $429, $427. Well, if you're trading a future on NASDAQ, who can tell me how much money you put up to trade a NASDAQ contract? If you trade a future, what's your initial margin on a trade for intraday trading? What's your initial margin? $500. So if you put up $500 and you're risking $20 a point, and $20 a point is too much. Okay, a point being 4 ticks on NQ because it ticks in quarters, 4 quarters to $1. Then is there any issue with putting up 424 to only risk $10 a point? Now, how much can you lose on that NASDAQ contract? Who can tell me that? Like, if let's just say, the world came to an end, all right, and NASDAQ went to zero, all right. I mean, we're really talking about Google and everything else, just like the internet went down basically forever. What's the maximum loss on NASDAQ if you're actually getting a NASDAQ future? NASDAQ futures were $20 a point, right? So if it's trading at 56.47 times 20, when you put up that $500 on NASDAQ to trade a future, technically, okay, I'm not saying it's going to happen, but technically you're risking $112,940. Did you know that? When you put that $500, it's a thing, and that's only if it went down. If you were going short, it's infinite risk up. I mean, obviously that's all in theory, because it has to actually move that far. Okay? But just because you're putting money up doesn't mean it's your risk. Okay? Now, in futures, that's your margin, which means if your account gets down, if your available balance gets down to less than $500, then the margin the broker will attempt to close your trade automatically. They are not liable to do so, and if it goes past it, then you end up owing money. Okay? In Nadex, the worst thing that could happen is you could lose that $427. That'd be your worst case scenario. Okay? So maybe some of y'all see one of the many reasons why I love Nadex. Okay? And you could do 2 contracts if you want it to be over $20 a point. Right? So, and I mean, there's other contracts on here. It's just, I don't, this one's positive premium, but it's going to move slower because it's closer to selling. This one has a little more proximity, but it's going to speed up as it moves closer. But if I'm scalping, I really want that tight proximity. If I'm going for, if I see like my target level is at least like 20, 30 ticks away, I don't mind, having, up to 10, 10 ticks in premium or proximity, I mean. So ideally, I like a trade to be, either in the middle or a little to the left on the risk side. So that way it will speed up, like I talked about on why am I losing on spreads. But this is a way you could immediately continue to trade Nadex. Do I trade into futures? Yes, I do. I have a futures brokerage account. I have several futures brokerage accounts with different brokers. So, but I wanted you to see this. This is how we can help you solve your problem of I can only risk this much. I just cut your risk in half right there. And you get to trade the same instrument. Okay? Does that make sense? Do y'all see the benefit there? And why? I mean, again, that near the market daily is what I'm looking for. Okay? So hopefully everybody gets that. Any questions on that so far? And okay, and then the one more thing I wanted to say, I say it over and over again, but one more thing I wanted to add in, just because I put up $400, okay, again, like on futures, you're putting up $500 and you could risk more, you could lose thousands, okay? But just because I put up $400 on Nadex, does that mean I'm risking $400? I mean, that's my worst case scenario. But can I get out before expiration? Okay, out of all you future traders out there, how many of you hold your contract all the way to settlement? Or do you exit after it's moved so many ticks? Okay, yeah, I know somebody who did on live cattle. They actually had to take delivery. But yeah, you exit. What about you option traders? Okay, I'm talking about like call and put option traders, vanilla options, like on stocks and things like that. How many of you hold your contract to settlement. Call and put option traders. Like, there's got to be a few in here, right? You never hold them to settlement, or very rarely. If you do, it's because you actually, because obviously I'm talking about in the money type thing, right? It's because you want to exercise it. Like you want to actually buy the stock or sell the stock or whatever. Or you're selling a covered call, so you're bringing in the premium and it gets probably worthless out of the money, that type of thing, right? But I mean, pretty much never. Like 80-90% of option contracts are not held. Like 98% of futures contracts are not held. Okay? So why do but for some reason people come over to Nadex and they see max risk, which is a good thing, and they think that's the amount of money I'm risking. That's my cost. No, it's not. It's just the money you're putting up. If it moves 10 or 20 ticks against you, get out of the trade, lose 10 or 20 bucks. Okay? So stop letting that max risk scare you. Because trust me, the max risk on the actual futures is a lot bigger, as I just showed you. Okay? Now, let's just say this trade right here, I don't know if it made the 10 ticks. I could see it not making the 10 ticks after you had the 3-tick entry right there. Okay? I could definitely see that happening. And you had your stop up here. You trailed it. I mean, that one just got hit. It lost. Like there's no way around that. I can't talk my way around it or anything. I wish I could. It'd be awesome. But yeah, there's just no way around it. It just didn't do it. Okay? But if we kept our risk in check and we used our proper stops, okay, along the way, then we had, I'm just going to add up what's on the chart. Okay, I know you missed this one, but there's a profitable trade. There's a profitable trade with proper risk. There's another trade that's 3. Okay, let's just say we're going for 10 ticks on these. All right. Right here, that one would have been profitable. That's 4. Okay, that one would have lost. So we're down to 3 net positive trades. Okay, we get a breakout right there. We're back up to 4 positive trades. So your Friday could have been 40 ticks profitable net. Less your fees. And that's just very small changes. I mean, we didn't do anything miraculous here, right? All we did was said, we're going to use these stops and we're going to cut down our tick size so that way we can properly do risk management. So John, does that help out? Okay. So let's say it ate up, I mean, I don't know how many ticks. Let's say it ate up 20 ticks. You're still positive instead of having a negative day. If you can hit break even on a day, this is a sort of a funny thing. Some people are used to profiting. We have a lot of traders, but so many traders used to like break even is a good day. It means you survived it to come back tomorrow. But you would have ended up positive, even with it eating up that extra. Okay, right there at that, because you would have moved it down. So you got in there 10. Let's just say it up 25, and you netted 1, 2, 3. Oh, we had 4. Oh yeah, we have C's also. So 4, 5. So you had 5 trades that made 10 ticks. So 50 ticks. Let's say minus 25. You netted 25 ticks. That's a profitable day. Okay, I am going to close the remainder. If it breaks that MVP, just watching it. Sorry, on a side note to this trade. I had 10 contracts earlier. And we are getting out. All right. was like $500, not too bad. So, but hopefully, like you learned a few things, learned how to lower your risk, and you know, got a few pointers on that. Okay, let me scroll back to the top so I'm sort of fair and I go in order because I know there's a lot of questions on here. Popped in, boom. Could you please review this chart and tell me how it could have been traded this morning by Ezra? Okay, there's a lot of ways this could have been traded. By the way, are you using the new DM template? This is really a VAD template, isn't it? With like predictor and trend catcher on it. Is that right, Ezra? Are you still there, Ezra? Yes. Cool. All right, so for VAD, what we're going to be looking at is we're going to be looking at VAD E, and I'm just going real simple VAD here, okay? I would recommend loading the template that I went over last week. Watch the two, like the THT videos I did last week. So the first week of May, all right? And like really go over those because I go over my template and how I use it and how it gives you a lot more trades. Like it's so there's a couple videos in there. One of those being like the 4 steps I take to place any trade, and I'd say it's probably my top 5 videos ever on education. And then it's the quality of the video is not the greatest, but it's worth like take notes and watch it. Like it's really worth it. Okay, so I'm at a real simple summary for anybody who's new to VAD. That's volume accumulation distribution. What VAD is doing is it's not just a histogram. It looks like just a histogram. It's actually adding up the volume in the trend for the trend formula we're using for what is a trend. Okay, so I'm totally gonna miss out on some good trades here, but um, but anyways, it's adding up the volume on a trend right there. Okay, and the different VAD formulas are different trend formulas for adding up the volume. Okay, so it's not just like, oh, well, yeah, well, my market's going up, so of course it's going up. It's like, well, no, it's actually using, as you notice, these are 2 different VAD formulas, and we tested A, B, C, D, and E out, and E has sort of become the favorite for a trend. I like to trade most of my trades. I'm not gonna say all, but I would say a good majority of my trades are with the VAD E, like trading in the direction of VAD E. Okay. Again, I'm not saying every trade I do, but I become more and more comfortable with my trades trading the VAD. Oh, there is just a beautiful long VAD. I'm just going to show you this because we're talking about VAD. Okay. I got to get rid of all those lines. What setting do I need to turn off, Lori? All right. See that green right there? Check this out. It's just like, okay, so we had an awesome divergence. Again, that divergence, I look backwards. A lot of people don't know this about VAD. As soon as it changes color, you can look back and see if there's a divergence like recently. Okay, a divergence means it went from a lot of volume on the down move, and then the next down move had less. Okay, and then we had even less, like right there. So like that right there, and I'm late, so I'm not gonna hop in. I'll just be depressed about it. That's actually where I got out of my short, which is wise. But that right there is a buy. Okay. So as soon as that bar turned green, because volume basically here's what happened is like we had weak volume on this down push, and then we had a little stronger down volume on this down push. Then we had really strong volume on this down push, and then it got really weak on this down push, really weak on this down push. And then the long-term trend said go green, go long. Well, if I get volume, short volume dying off, that's one of my favorite long signals right there. Okay. So, and right here, here's another one. Okay. We didn't really, I mean, this one wasn't, I mean, we got, actually, we helped with that one right there, and then volume turns short. So that's a short, like right around here, which would have been a really like nerve-wracking short because it did a pullback. Okay. And right, those are about equal. Okay, but then right there, see that? The volume is less, and then it turns back red. Boom, that's a short. And that would have been, I mean, that's your like one of your best setups of the day. Right there, short oil. And I went short oil today on today's radio show, which was recorded. Um, and I will ask Cameron, can you put the radio show in the THT section with today's webinar? Okay. So that dropped on down right there. And I mean, just fantastic trade. Okay. One of the questions I asked when I was going through this is, hey, bonus question. I don't know if anybody answered it or not. I haven't got a chance to look. Was where should I put my take profit on this trade, my first take profit? And alls I did, and I talked about this on that 4 steps of any trader about thinking ahead, is I looked back and I'm like, where would breakout traders go short? Okay, and where would absolutely painfully losing traders like bail out and sell their long positions? Okay, right here. Happened to also be the low of the day. Okay, but just as far as recently, I mean, they're gonna go here, like all the way down. I mean, I'd expect like right here. See where there's an oscillation right there, and see how we had an oscillation. So there was some buying and selling going on during that point. And then right here we had, we got some pullbacks there. But then this is like the big hot spot. And so I went short 10 contracts on oil, and I took off half my position right there. And then I let my other half trail with I was already trailing, but I let it trail and I let it use like the worst case trail, the MVP. And as soon as it closed above the MVP and broke a few ticks above the high, I closed it out. I grabbed, a few hundred more. So, and by the way, the risk on that trade, I'll go back over it in a little bit, was $9. All right. So, $90 for all 10. So I'll show y'all how to do that again in a little bit. All right, but I just want to show you that VAD. Let's look at this VAD right here, and I need to take a, see, how can take a picture? All right, so if the market is going down right here on VAD, we're looking for a divergence. We don't, I mean, it's so small. There's like nothing happening. Market hadn't opened yet. Okay. I'm assuming this is Eastern time zone, Ezra. So sort of waiting on the market to, open up and get a little juice, right? Flips back around. I get a long, now I need a short divergence to go long. So I do get that short divergence right there, which gives me a long right. If I can, there, which was a little nerve-wracking because we had the pullback, but I mean, it did pop up, and now this one did hop up and it hit right into the settlement zone. Okay, you see that one? So that would be like a point where I'd be looking to, at least take half off, right? And my stop would either be like right below the swing point, which also happens to be ice, so that's nice. Cutting around there, but you could also be using your, predictor levels, but that may be, even for me, that would be at this point where it's at, a little uncomfortable of a stop. So that swing low, when I enter right there on that breakout, and then I'd be going, okay, where am I going to target for half? I don't do 10 ticks and out. I know some people do. Now, if I'm doing like a C chart, yes, okay. But like when I'm trading anything else, no. Um, so like C charts, like that's my scalp chart. That's Lori's scalp chart actually. So I appreciate all of her contributions on it. But like on anything else, I'm not 10 ticks and out. Where's a level I should get out at? Okay. So I'm like, okay, well, the settlement, and I don't wait, it doesn't have to hit settlement, the zone. It's like right there, okay, it hit it, it touched it, I'm out. All right, so that's my first trade. Let's see here, don't really have another divergence there. All right, now we flip short. Is there a long divergence? Yes, there is. So if we look back, see this right here, how it go up, and then the next little uptick in um, volume right there is lower. So as soon as this bar closes, I can go short. So obviously, if I'm going short right here, my target's not going to be 2 ticks away. So what else would it be? Well, you got your zones on there, so that's perfect. Okay. So when it hits a zone, I'd take off half my position. Okay. And then you could trail your other half, in this case, say with the predictors. So the other one would be out with a little bit of profit, and that one got a nice big profit. And I mean, half could be just two. Okay. Let's see here. Do we get another one? Nope. Volume's going up. Volume's going up. Okay, so we get a long, and we do have a slight divergence right there. So on this trade, I mean, we got that one like right. That was perfection. Okay, entered right there. So that's going on up. Again, I would have liked to have hit this level. You have another level here too as well. Um, you didn't quite hit that level. So if you're waiting, then it came back and you broke even on the trade. It was a nice entry, but it just never had to take profit. All right. Now, if we go on over here, see if we get another one. Nope. Okay. So we got short. So short right there. Okay, we have a divergence right there. See that? So if I take that straight up as I can, that's my artistic drawing here. That's our short. All right, so obviously at this point the zone's too close to take my trade. So what's the next level I could look at? I could look at either this low or I could look at, I don't know what that blue line is. I'm not quite sure what that blue line is. I'd say that blue line, but I'm not sure it is. So I'd say the half deviation mark. We'll just go with that. So right here. So you went short and take out profit right there. Oh, it's blue ice, obviously. Okay, so yeah. So the deviation line, blue ice, obviously you touch that area. That's a good point to take profit. Okay. And then you can trail it on down and take, a little bit more when it closes above. Okay. This is my big thing. Close above the predictor arrow and then set 3 ticks above that close. Let's see here. That's short. Do we get another? We don't get another divergence there. Okay, we're going long. We do have a short divergence. That goes up. And that trade's a loss. Okay. So I would not put a trade. I would not put the stop all the way to the swing low, and I would not put it all the way down here. Now here's another. I think this is actually a good opportunity right here. Looking at this trade, okay, Ezra, like we had this long trade set up, and we got a great divergence. Volume just flipped. We're looking at a buy right here. I guess it's not as bad as it looks, but make sure you're really comfortable with the stop. So right there, I mean I guess that's not as bad as I thought it was. I think it is over here. But that would be your entry right there. Pretty much where you got out is where you get back in. And then say you'd have your stop. I would put my stop like right below the swing low because your predictor hasn't even flipped yet. So you got to use a few ticks below the swing low, right? What happens if predictor hadn't flipped? What do you do? Okay, that's it. And then when the predictor does flip, then trail, and as nice and sweet of an entry as that was, it's actually I thought it was a loss. It's more of a break trade right there. And we don't get another one. Now we're going short. Do we have a long divergence? We don't have a long divergence on this short. We don't have it going from strong to weak. So no trade so far. Finally, right here. Okay, so right here, strong up move to a weaker up move that flips right there. Right? So right there. We can go short. And I'm not sure, you're probably putting low a day, or either way you got a zone. So you could target that right there for your first take profit. And then trail, and on this trail, you probably lost a few ticks. Hey, maybe both actually, Grant. All right. So Ezra, did that help? That help a few people? Just sort of like how I'm looking for that divergence and sort of where I'm setting my stops and how I'm trailing them and how I'm looking at a take profit on half. Like I do like to take profit on half. I mean, because I don't expect the market to fly all day long. But I also like to let it, run. And a lot of times running gets me a little less or break even or maybe a small loss. But man, when it goes, it goes. So, and again, I mean, we're on Russell, and if what is it? It's $5 a tick, right? And it's still ticking in .1 last time I checked. I haven't traded Russell a whole bunch lately. So we're talking $50. Yeah, still ticking in .1. So we're talking $50 a point. So if that is too much risk, I mean, 10 ticks isn't, I mean, that's an easy move on the Russell. Okay? Like it's a very easy move. We went from 1397 down to 1385. That's 12 points. Okay? If that's a bit much, hop over small caps. Again, I got the near the market dailies. Okay? I think long and short. And, maybe I'll put up a little bit more money. Okay? Or maybe not. I mean, like right here, I may put up 49. That's 7 ticks. It's like, you know what? If I'm going for a, 2 or 3 point move, I may give up a few ticks. The thing's only going to get faster. Okay? I got 3 hours. Um, but put that up. And again, you may only be risking 10 or 20 ticks. Okay? You don't have to risk all $48 there. But you can make it $1 a tick, which would be $10 a point instead of 50 a point. Or you could do 2 of it, do $20 a point, 3 of it, $30 a point. So this can really help you. So yeah, I'm going back up to the top and coming down. So, all right. So Ezra, did I answer all your questions on the VAD chart? Awesome. Okay, so all right. I'll bring this up. I said it earlier, but just to get it in the recording. When the trader said that the template looks a lot like the alchemy template, and then I remind him like this isn't what alchemy looks like. Alchemy doesn't have C stars on it. Alchemy doesn't have VAD on it. So apex pattern, MVP, deviation. So there's a lot going on there. Okay. So that's a mod, and it doesn't have isones on it. So that's a different chart. That's not a. If that is a saved alchemy chart, then we have a new alchemy chart. But that's just a modified alchemy chart. So it may have some similarities, but it's definitely not the same. Okay, so just re-answering that. Let's see here. Awesome. Looks like Speaker took some nice shorts today. All right, Alan. Are you still in the room, Alan? The two lines on my template. Which two lines? This line and this line? Well, yeah, that I mean, I'm using the same indicator on both templates. Not using that one on that one, but so yeah, I mean, there's gonna be, I mean, some with the same bars, things like that. So both of them have, expected volume. But I mean, that's the similarities, like those two things, and bar type. Okay, well, we're always improving. Alan, are you in the room? If you're not, I'll go over it anyway, just so. Let me sort it and I'll see if I can ping him. Put yo, send him a private message. All right. So let's look at this pound yen chart. This looks like a old IZSS chart. Again, I'm really highly recommending y'all hop over to that Darrell chart for you IZSS traders. Okay, I cannot recommend that enough. If you have not watched the THT videos from Monday and Tuesday, please, 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 please watch them. Please watch them. Okay. One of the things I did is I changed the settings on the trend catcher. Another thing I did is I changed the setting on iZones to where, let's see here, where is and Lori, I get rid of these. Can you private message me so I see it how to do that? I'm kidding, ran over with lines. Um, let's see here, right on this, go into indicators. So I right clicked on a chart. I went to indicators. I went to institutional zones. Okay. Right clicked on the chart, went to indicators, went to institutional zones here in the bottom. Okay. On the Darrell chart or on the whatever chart you got with eye zones. And I changed the bars forward supply demand to 20 instead of 2. Okay. So hopefully everybody sees that. Institutional zones, parameters, bars forward supply demand 20. Okay. Why I do that is so I don't get all of these little green and red boxes that confuse the absolute crap out of me. So I actually ignore them so they don't confuse me, but I know they confuse a lot of people. And so when John and Ben were down here, I was like, how do I help people just not see those? And so we were working on it and we figured that out. Yeah, I recommend everybody hop on. If you're going to trade iZone Sharpshooter, I honestly recommend that you hop on that new template. It's going to help you. You're gonna learn a lot more. You're gonna learn from the THTs really quick. I mean, that VAD course I just taught, that I just now taught you, that's VAD. Like that's all there is to VAD. It's trading in the direction of the trend and looking for a divergence on the VAD-A, like going in the opposite direction. That's it. More trades. Yeah, Lori, I'm talking about these. Okay, my blocks are too high. That's what it is. Just turn that off. Okay. Remove it. There. Okay, so back on over to this. Okay, so one, I wouldn't pay attention to all those. Okay, so trader states I went long for an entry at 149, 50.45, 97 on Nadex. And it turned, and I was taken out for a $20 loss. That A and E were showing long. Okay, well, remember, VAD A and VAD E lining up are not a signal. Just, I'm not saying that's bad. I'm just saying that's not a signal. Okay, that's not a confirmation. So VAD A going long is a confirmation. VAD E going long is a confirmation. VAD A having a divergence is an actual signal. Okay, just not that criticizing you in any way. Just saying, like, make sure. Like some people are like, oh, VAD A and VAD E are long. Don't do that. No, wait for that divergence. Just update your toolkit, and the Darrell IZSS template is in there. Okay, so right here, market came down to half deviation, pound yen, and you don't have expected volume on here too. We definitely want expected volume on here. We do expected volume for Forex. Um, Another recommendation, but that'll be if you just load that Darrell template, it'll be there. And then we get a long, a long, a long. I mean, we're long, 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 long. So I mean, those are all long entries. And stop, trail, enter there, and yeah, you're out. I mean, there's nothing you could have done to have fixed that trade. That trade lost. So again, as long as your risk management is in check, then you're okay. All right, so that trade was a losing trade. So now there's many other trades on the chart, that we can find that were profitable. But we got a short right here. That was nice. See everything lined up on this one. That short was profitable. I don't know how early you were trading. Um, like what I'd like to really see is your full trading day, not just like a trade. Sometimes we point out like one trade, like why did this trade lose? It's like, well, because trades lose sometimes. Um, but sometimes it's because we make mistakes too. So make sure that you post your trades, not just a trade. Because remember, the risk management formula we teach is 5% of your account divided by 6 is the max risk you want on a trade, right? Ideally, that's really what you're shooting for. Leaving enough money into your account at least until you can get to that point, and moving down in tick size if necessary to get there. So um, if you do that, you would actually have to have 6 net losses without any wins. Okay, or like, because if you had like 6 losses and 2 wins of the same size, you'd still be only down 4. Now, if you had 2 wins that were really big, then they would cover it. So that 5% divided by 6, that keeps my brain sane when I do my risk management. And again, I can show you how to lower your risk from what I was teaching this morning. We'll go over that. Okay. So, but yeah, there's nothing you could have done on this specific trade. Now, this trade, like I said, was profitable. This trade was profitable. So, no entry. But yeah, that's an entry. No entry there. That's an entry. No entry there because we didn't break a low. That's an entry that lost. So nope, VAD-A and VAD-E will look the same on every chart. Doesn't matter. It's just we have pound yen on here. So we're going to get pound yen. So that's one of the volume indicators. We got ICE volume indicator, and then it's missing expected volume indicator. I said this is a valid entry. I said it lost. I don't understand what your question is, John. No, what I said is they wrote that VAD A and E were showing long. And I said VAD A and E showing long are not an entry signal. An entry signal using VAD is like a long entry signal using VAD is VAD A showing long with the divergence, sorry, VAD E, getting all confused. VAD E showing long with the divergence on VAD A. You need to have a divergence on VAD A to have an entry signal using VAD. The point I'm making, I guess I'm just not being clear, but the point I'm trying to make is I'm glad you're asking. Like, ask until like you get it. Get the answer you want. Like, I'm really, like, I'm actually loving it. We're like, no, but like that's awesome. So what I'm saying is this statement right here. The trader stated this: that A and E are showing long. Like, and what they were talking about, they weren't talking about divergence. They were about, well, hey, VAD E is green and VAD A is green, so they're long. So that's like, it's right there on the chart. Like I'm showing you word for word what they said. VAD A and E showing long. Okay, you see that? And what I'm saying is that is not a signal. A signal is VAD E showing long with VAD A showing a divergence. So I don't care if both colors line up. I care if I have a divergence on VAD A for a signal. Okay? Like two colors being the same, whatever. I want to see weaker pushes in the opposite direction for me to take that long trade. Does that make sense, John? I was literally simply addressing this comment right here. Say it one more time. Okay, VAD A and E being the same color is not a signal. All right? Yeah, you can find whatever forum post you want. You can share it on over, but I'm just telling you how I trade it. Okay? So, VAD A and E being the same color is not a valid signal. Whatever the forum post says, point it out to us. If somebody needs to have it deleted, we'll have it deleted. But VAD A and E showing long is not a signal. VAD E being long requires, and this would be like here's an example right here. Okay, see? Well, that's not even good because we don't get a breakout. I showed them over here. We're long right here. And then the short volume gets weaker. That becomes a long signal. See how it goes? Like short volume getting strong, and then it's weaker on a pullback. That's all there is to it. Like if y'all are making this complex, like you are just hurting your heads because there's nothing more. It's like the simplest signal that exists. Either this is pointing up or this is pointing down. That's the trade direction we're looking for. Once we got that, we're looking for the opposite direction on A. Okay, so A is pointing down. And then we see another one pointing down that's weaker. So when it flips back, boom, that's a signal to buy right above that. Like that's the whole concept of VAD. That's the number. There are 100 ways to trade VAD. There are a lot of ways that traders have traded it. So my answer for you, John, is how I trade it. That's the only thing I can address for you is how I trade it. Okay? So I can't address what some forum post may or may not say. I can address it in the forum if you want to send me the link to it, that type of thing. Okay? But that's how I trade VAD. Probably was one of John Skelton's videos. Because you never know that guy. But one thing he would probably say is watch out for both of them lining up, because then you're also going to be looking for a divergence. So, but that's the number one signal I use on VAD. And I'm sort of here right now to teach you what I do. Okay? Let's see here. Okay, so we got Ezra covered. And Grant covered. Got Alan covered. I don't know if he saw it, but I covered it so you can see it in the recording. Jason, how were the barrel races this weekend? They were fantastic. Don't have everything up yet, but that's Felicity running on her horse Bodacious Hank. And she rocked it. She brought in 5 checks for some pretty nice cash, and she won the average buckle against like several hundred adults. Thank you for asking. Let's see here. Yeah, it was pretty full. Like, it was full to like 297, so it was a pretty full race. Let's see. I know Jason has a couple questions about hedging. See here. So Jason, start. Okay, here's a screenshot of your hedging question. Good. Okay. So you bought 20 gold contracts, 1230 to 1270 daily spreads. You bought them where? Let's see here. I know I'm trying to find your position over here. Like you just bought them there? I'm going to scroll down so I can see your writing. Typing. So you found it? Does require divergence in the forum? Cool. All right. Well, that's good. Made me worried that somebody's teaching the wrong thing. Okay, so VAD really never shows different on different systems. So it's just, it may plot different on different bars or different instruments, but at the same time, it's always going to show the same formula for that market. And we're always going to use it the same way. Okay, so right now I'm focusing on Jason's question. So Jason, where you said you bought, but it looks like you're short to me. Are you short or are you long? I mean, because this shows that you're short a contract. You sold the elevator and bought the spreads. You sold the future and you bought the spreads? Okay. All right, cool. Well, that helps. All right, so you bought 1230 to 1270 daily spreads. Okay. And sold, helps if I keep reading, right? And then you sold 2 GC contracts at 1228 for a total risk of 13 ticks. That difference being the difference, by the way, if y'all don't know, is if he bought them at 1230.9 and he sold at 1228.6, his risk is the difference between the two. So your risk is the difference between the two. So let's check your math on that. All right, so we sold for, sold 1230, bought for 1230.9, and you sold at 1228.6. So you actually had a risk, so divide it by 0.1. You actually had a risk of 23 ticks, not 13. Okay? So you had 23 ticks of risk. So, and then times $10 a tick, because you have 2 gold futures, times 2. So you took on $460 of risk on the trade. Okay? So to do the math correctly, well, we just fixed your math. And we had to multiply times 2 because you're doing 2 of them. Okay? So subtract the price you bought it from the price you sold at and multiply times the number of contracts. Are the only ways to lessen the cost of the hedge if the spread ticks lower at the edges? How effective is hedging? Okay. So the lower the cost of the hedge, if by cost you mean money that you put up, then obviously the closer it is to the floor or ceiling will make it a less, I guess what you call expensive, but less capital requirement hedge. If you mean a lower risk, then you can choose one that is slightly in the money, okay? Where the prices are closer together, or if there's lower, like the one I did today on oil, where there's like no premium, then that allows you to have less risk. It sort of locks it in until it moves so far, okay? If the spreads tick, slower the hedge, how effective is hedging? It is completely effective because it'll speed up. It'll go faster and faster and faster. So like it'll be at 100% like in the middle, right? As you approach expiration, it'll get faster. If you get all the way to the top, it'll get really fast. So, as it's moving, it'll be faster and faster and faster. So also, remember I usually use like 2-hour contracts when I'm hedging. So that way they move faster. Like today, my contract expired. I didn't care. I lost like 190, I think, on my hedge. I think I made about 700 or 800 if I go back and do the math on my actual, short position. So, you know, 600 bucks, sitting down clicking a couple buttons. Um, so yeah, it's completely effective because, especially using those 2-hour contracts. Remember, the reason we don't like the 2-hour contracts for like trying to mirror the market is that they are going to move, you know, slower as they get closer, but they're also going to get closer to expiration, so they're going to move faster. So there's two things. One is Google Ultimate Hedge. Okay. Not Google, or to search Ultimate Hedge in the forum, I mean. So that's one thing you can do, because I actually have whole videos on the hedge. Okay. And then you've watched it a few times. And then, of course, watch today's show, because I spent the whole show, like, literally, I sort of took over the show today and talked about hedging. And let's see here. What do we have? It's my insurance. So basically, now, by the way, my favorite way to hedge still, like, now, used to be futures with spreads. Now, the one drawback, Jason, of doing futures with spreads is, let's say you have a drawdown of $2,000 in your futures account. Say you make 1,800 in your spread account. Okay, you're still too. It's not like they even out. They don't talk to each other. So you have to have the money for margin if you're using futures versus spreads. Whereas if you use like a daily spread to go short, and then you use an intraday spread like to hedge it, then they're both in the same account, and you don't have to worry about any kind of margin issue. I mean, even though you're only down 200, it's like your futures broker sees that you're still down 2 grand, even though you're up 1,800 over there. You know, they don't communicate. Just sort of, I think about having two different bank accounts, and you know, you're short 500 bucks on one, and you're up 5,000 bucks on the other. It's like, well, the $500 short one doesn't care that you have 5,000 the other. They want money in that account too. So, like this morning, I went in and I'm trying to see what pictures I took. I'm trying to take a couple so I can talk about it. There we go. So I went short 10 contracts, okay, on oil. And then I went, now right there, 3-hour contract, wider contract, $5 wide contract, 42 minus 47, right? And then I bought, okay, 10 contracts on a shorter term expiration. The difference between my prices was, in this case, actually only 4 ticks. So, because I got a better fill than I thought I got on the show, I wasn't even looking at my actual fill. So, what was my risk if I bought at 46.48 and I sold at 46.44? What's my maximum risk on that trade? 4. I did 10 of them because it's dollar tick. So 4 ticks at $1 tick, $4 times 10 contracts. What's my maximum risk? 40 bucks. Okay. And the market, since I went in and I basically went short at 46.48, could go all the way to 47.75. So we're talking about a $1,200 move against me. Okay. And the most I could lose would be 40 bucks. Who's ever traded oil in here with a $40 oil future with a $40 risk? Without any concern of being stopped out. I mean, Maryland's like the oil pro. Maryland, you ever trade oil with a $40 risk without any concern of being stopped out? Let's see if she's hanging around. She's right talking to Lori and Plotton. Yeah, I see no responses. Yeah, $40. Who in here? I mean, that was on 10 contracts. 10 contracts equals, at $1 a tick, equals one oil future. So that's like trading an oil future contract, okay? And only risking $40, and the market could literally move 1,700 against me. And here's the really cool part. If it did move against me that far, I actually would have made money. Because this max risk would have been taken care of, and then this one would have taken over, and I would have profited some. So it could have moved to get. This is the cool thing about using the spreads on both sides. Okay, like in fact, it's almost like a strangle. But I was obviously focusing on the short. But if it went down, you can see this is profit and loss. Okay, on the left side here, P&L, zero profit and loss. Okay, on one contract, I had 10. Okay, so I could have made like $4,000 if it would have just flown down. All right. This is the price of oil as it moves. Okay. So I put on a trade with a $40 risk where I could make money if it flew up or if it flew down. And no matter what, I wasn't going to lose more than $40. Audio out there trading binaries risking $40. And it has to go one direction. And you definitely don't have a $400 profit potential. Do I like binaries? Yes, but it took me a long time to learn how to trade them well. This is stress-free. You put it on, it's your $40 risk, and you just sit back and you're just praying the market moves. You don't really care which side wins. I mean, hey, hopefully, in this case, I hope the red side wins, right? Because I make more. Just move. Please move. But like every tick, up and down, up and down, up and down, my heartbeat does not rise at all. And by the way, I could have risked $4 on that trade to be able to make 400 potentially. Or I got 100 if it went the other way. $4. So when I see people saying, I can't afford the risk, I'm like, how much do you have in your account? And I'm not trying to be, a smart ass, but learn to hedge. The drawback on hedging is the market is going to have to move before, like I'm basically locked in that risk unless the market moves. Okay? The market doesn't move, then I'm going to lose my $4 or $40 in this case. I'm okay with that. I'm expecting oil to move. It doesn't have to move a fortune for me to make a good amount of money. But I risked $40, and like I said, I netted, I don't know, 500 plus. I don't want to quote the wrong number, but y'all saw me take another 250 right there just a second ago. Exactly. The market doesn't move. Who cares about $40? I mean, I made 500 something bucks. I have to lose 10 times plus in order to like break even. Like more than 10. That's odds in your favor. You could lose a lot. You could lose very often, and odds are still in your favor. So it's not hard. Pick a direction, choose a daily near the market spread, and either find a low risk contract, but look, the whole thing you're looking at, okay? The whole thing you're looking at is how far away is it from, the market, and what's the difference between the two that you're buying and selling. I mean, like, make it that simple. I bought this contract, I sold this contract, what's the difference? of the offer on the one I bought and the bid on the one I sold. That's my risk. That's step one. Okay. Now, how much, I hate the word, but costing me, what's the amount I'm putting up on the contract? Okay, if it moves, okay, let's just say it was $5. I mean, it could be 20, it could be 30, whatever. It's basically have to move that far below the floor. Let's say it's $5, okay? Then the one I went short would have to move at least 5 ticks below the floor of the one I bought. So that short one was making enough to cover the risk. Okay? As often as I can. Like I said, that is my original first trade I came up with on an index. Now, when I started, I actually was using futures versus spreads. But then it got even less hectic whenever I decided to do spreads versus spreads, because then I didn't have to worry about drawdown at all. And then I realized, holy crap, when I do these, like, instead of having to worry about closing this thing out because it only protects me so far, if I use the spread, I actually can end up making money on the other side. If I'm like just really wrong. Every once in a while, you ever been there? Really wrong? Yeah. This, by the way, requires 0 stop loss. I have no stop loss. I don't, because my stop loss is it's already set in. Like it's $4 or $40, or, you know. I mean, maybe it's $20. I mean, I don't want you to get the impression they're all going to be $4, you know. But my stop loss is already set. There's nothing for me to worry about stop. Now I can trail my trade. I can still take profit, like I took profit on half. Okay. Whenever it, I was showing, whenever it hit, I drew it on one of these. Yeah. Whenever it hit this level where I knew all the, basically they were going to start unloading. That's what I talked, one of the things I talked about last week, how to know where to, you know, take profits and all that. That's part of that THT series from the first week of May 2017. But so I took half my take profits right there. And then I let this one come back up a little bit on the other half and took those off. And when I put on, it's sort of cool when you watch the show. I'm like, you'll never see my risk go greater than like $90 or $100. And as it was moving all around, I mean, it was actually staying right around 40 or 50. And like the reason it would expand out back and forth is, you know, bid offer spread can change a little bit. So, and they're not always going to be like that perfect, but you can still always trade them. So again, if you don't want to do that, you can do futures trade, keep doing them, and put on a hedge. Do a forex trade, put on a hedge. Don't worry about your stop loss anymore. Your whole trading will transform if you'll pick this up. You know, again, top 5 lessons. This is one of them right here. Ultimate hedge. If you don't have to worry about your stop loss, you don't have to go, oh, do I get out? Do I take my profit because I'm finally green? Do I go the other direction if my stop loss gets hit? Or do I move my stop loss? And then if I do, what if it goes back in my direction? Do I hop back in? Like all those games you play in your head, right? We all play them. They all go away. And then you go, okay, that's my long trade. What's my game plan for taking profit? What's my game plan for trailing? And you know, what would need to happen for me to go the other direction? Because you know what? I could put on a long trade also with a different spread. And I could hedge it too if I see a long setup come into play. Right? Isn't it better to hedge spreads with binaries? 100% no, 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 no is the answer. And no again. Binaries are a horrible hedge for spreads. The only time, and Jack just said it, the only time I will use a binary to hedge spreads is when I'm doing an iron condor where I have a big premium zone. And this is in the iron condor videos that I have up. And if I could buy like a $5 binary like on each side, and that would like sort of hedge me all the way up to the other side of the spreads, because I'm inverting, I'm actually collecting the premium. Okay. So, when you see like green premium on the spread scanner, like I'm taking those trades. If I go over, like, say, I don't know how much it'll be this way in the day, but NASDAQ, let's get rid of all of that. Or I'm like $34, $35. I was like doing those to that premium right there, like a zone. That's way too wide, by the way, but be narrower if I was doing it. And here, let's do. That's still not great, but it's a better example than this huge one. So if I could buy like a $5 binary, like if the market oscillates to help hedge, because it'll make me like $95. Hedge if it goes outside of that. Okay, but binaries are not like, I've heard some people teach that and they don't know what they're doing because they're an all or nothing contract. They don't move dollar for dollar. So, all right. So, Jason, do you have down hedges a little better now? Awesome. Okay, yeah, we got to get you where you're mastering those. So you can go here and go, I'm going to go short that. And I'm going to go over here. I'm going to buy that. And then that is going to be my trade. Look at that. And that's a possibility. It's like, well, I really would like it to hedge all the way down to really cover my risk. So, and this is where the scanner comes in. Uh-oh, I think we found our hedge. Look at that. Perfect hedge. Now this one I can't make money if it goes up. Okay. But what is my risk? 56.52, 0.5, 56.49.1. So 30 bucks. It doesn't matter how far it goes against me. $30. And the spread is $111 risk. Okay? But by going in and adding on that spread right there, now that spread just became a $30 risk. No stop losses needed. I'm good. If I'm looking for a hedge, I'm really going to put it at open. Like I'm looking at anything. First, I'm going to find my contract. I'm going short, which is going to be a very close proximity spread with some profit potential. Okay. And then the next thing I'm going to do is I'm going to find the lowest proximity I can over here. Ideally, it's within 10 ticks, and that's great if it is, but it may have to be greater. Okay. But um, I'm going to look for, as close as I can with as low risk as I can. Like that's 20 ticks. So now I'm looking at a 56.55 to 56.48. So now I have like a $70 risk. This one, I only have a $30 risk. Right? And if I went down to like this one in the middle, like, well, that's nice, but it doesn't cover my hedge. See how when it's going down, this one keeps losing and this one doesn't keep making money? So by clicking on the scanner, oh, that covers that thing completely. So all the risk is covered. So that makes that an ideal candidate. So you can even look at longer term ones, whatever. You can look at that. You go, oh, let's see that one. Well, that one can make a lot of money, go both ways. But it's $45. So it's going to move 4.5 points for you to make anything below the ceiling there. But your risk is about 5 points. It's still not as good as this trade right here. That's the best trade because it's where am I buying and where am I selling? That's my risk. And then the lower the risk number is on the spread, even though you're not risking that much because your risk is the two together, the lower that number is, the less it has to move for you to be profitable. If you want max delta to mirror the market, all you do is click near the market daily. That's it. And then what you want is you want, let me uncheck those. So near the market daily. And I went over this in my videos. I did like a whole session with Jason. I believe it was on Tuesday. Why am I losing on spreads? So Ari, you need to watch that THT video. But right here. So, and then what I want is I want one with some upside potential and a really close proximity. The closer the proximity, faster it's going to move. Okay? Kelly, can you post a link to that THT video? The why do I lose on spreads? But those are the settings for you on how to mirror the market to get max delta Ari. Chris, one of the good things about your question is what comes first. The first thing I do when I'm going to trade is I actually find the contract on Nadex I want to trade first. Okay? I need to have that picked out before the signal comes up. Some people are like, oh, I missed the signal. That's because you spent 10 minutes looking, trying to find the right contract. Okay? So find your daily contract first. All right? And then look at Ninja. You get a signal, boom, pop the daily on. And now look over at your intradays and see what could be a good hedge. If you can't find a good hedge, just use a normal stop. If you can find a good hedge, hey, put it on. Does that help? Like, know that, and what you can do, what I do, whatever I'm trading normally, okay? Like I go in here and I'm like, okay, which one do I want out of these? And I'm like, I really like that that's 0, but I don't like how close it is. I want to be center or left on the risk side. And that one's $400. That one's $100. Yeah, I'll give up a few ticks of proximity. And so if I'm going to sell, if I'm looking for a sell signal, I'm opening this contract up with the out of ticket window. And we have a pin program that's free under like free tools for traders. Kelly, if you can find that one, it's a helpful little tool. And hit control minus, you can zoom back out. And I'm going to have this ready. So when I get my sell, then all I got to do is, place my order. So, but it's already up before I'm looking at my chart. Like this is going to be the contract I'm going to use to go short. And then I'll go back. And I'm like, now I can do this obviously faster. I've done it longer, but then I'll go back and I'll say, okay, now, show me my intradays, and I'll say, if I went short on the buy side, right? And I can go, okay, what's the closest price with the lowest risk, okay, to what I just, sold. That has a little bit of time in it, like a 6-minute one, probably not worth me putting up $1 for, right? Hour, 2 hours, that's good. So I look at these and I'm like, I'm either gonna choose. I'm gonna choose one of these two right here. I mean, most moves happen within an hour, so. And once you're trailing, the hedge doesn't matter, right? Because once you're trailing it up, the hedge has done its job. And a lot of people, they have the tendency to want to close that hedge. So I want to show you something. There's another fun hedging. All right. The floor of this is 46.25. It was bought. It's currently at 46.26. How much more money can that hedge lose? That contract, how much more can it lose? $1. Is there any reason to close that trade? Is it possible the market could move back in my favor after I say I've closed my short and taken my profit? Then it might scoot its little butt back up there, and I might even make money on my hedge, or get my money back at least. Is that possible? Yeah, I mean, if we look at oil, today I was short, and look what happened. I got out down here, right? That line right there. And then, so you may not make money on it, but who knows? You may clean house on it. But there is no reason to close a hedge that only has a few dollars value in it. You basically have I mean, let's say there's $10 value in it. You have a $10 long contract. Like, I mean, for 10 bucks, you make 140. Market retraces. Cool. I just leave it alone. I'm like, I've already paid for my insurance. I've made my money. So I don't care about. I mean, I accepted that risk before I got in the trade. So now, if I can, now that I've made profit, I mean, this is all live. This is real money. I get started on the radio show and went into now. Okay. I'm not going to close that contract. I hope the market goes back the other way. So I won't lose less. I won't lose anything, Jack. I've already made profit. I may make more. Now, if that contract is about to expire and I'm not in profit, I have two choices. I can put on another spread, which will add some more risk, okay? Or I close both contracts and I wait for another signal. Okay? And there we go. So Maryland trying it out. What process do I use? Okay, so again, this is covered in the why do I usually use on spreads video, the THT section that Kelly posted up there, okay? The process I use is near the market, daily, and I look for a contract that has low proximity and is either like a 1-to-1 or better ratio. Okay? That makes sense?
New double top on NQ.
Right there. Near the market. Daily. Close proximities, which is what the near the market does. Okay. Close proximities. Like I said, I want it to be on that side of the line on the red. Now, can save it. What am I considering? News, etc. You know what happened this morning? I hopped on the radio. I had oil up. We were talking about oil, talking about it retracing. I said, hey, let's go short. Let's put on some contracts. I got some short stuff showing up on my signals. Let's do it. We went in. Boom. That was it. I didn't spend hours of analysis. I wasn't looking on a whole bunch of stuff. Oil was moving. Short setups. Hop in. Pretty much. Any money mode, that one. Let's go short. Let's hedge it. Like, I mean, traders try to make it like I say this like over and over. I'm like, trading isn't as easy as we want it to be, but it's not near as hard as we make it out to be. You know, yes, am I aware of the news? Of course. You know, I make sure I'm aware of news that's coming out. But yeah, I mean, the thing is like so comfortable with that risk. I mean, if I wouldn't have been talking on this, I said at the beginning, I'm like, man, I'm gonna miss on this long trade. I got spit, and there it goes, boom. Um, took the short, and I was like, I need to take the long. But I mean, if as long as you're okay with the risk and you don't have the fear of the stop, which is what the hedge does for you, it just becomes a lot easier. Now, you can't use that hedge on scalping, stuff like that. You're going to use near the market, hop in, hop out, you know? So, but yeah, oil was moving and I picked it. It was funny is I only had oil charts open this morning. Like they were just left on from yesterday. And I was like, okay, let's go with that. So, I mean, there may have been 100 markets that were better, but I literally only had oil open when I hopped on the show. Because I woke up like 10 minutes before my radio show, came upstairs, my shorts and t-shirt, hopped on the radio, picked a trade, traded it, made 500 bucks in an hour or whatever, then hopped in here. But a few other trades I've done also. But, like, I'm not trying to say, wow, look at me, whatever. What I'm trying to say is most traders' problems is their risk. And that's why they're freaking out. So this is where I went over here in the morning. I went short. Because we were talking, and then we were talking about short oil, and I was like, I was waiting, and then boom, we got that. I hopped in. It went up against me a little bit. Did I care? No. I'd already locked in my risk with my hedge. Came down, made a little bit, made a little bit, made a little bit, hit my take profit, take off half. Came back down. Thought about taking it off, but I'm like, man, this thing may fly. So I'm going to have my worst case stop. It didn't. It went in the other direction. Took off the other half. Would have been a great long trade. So, I mean, it was a VAD long everything. So, I mean, every setup was there. Like, every setup was there. Like, there wasn't a single signal of our system that didn't say go long. I guess the apex didn't say go long, but everything else did go long. But yeah, I don't know. Does my point come across of how minimizing my risk helps me trade a lot better and not over like we get this analysis paralysis thing going on because we're trying to be right because we're so afraid of losing money because we have to win and we can't afford to lose over and over and over again and we can't take the stress of all those ticks just bouncing around against us that it just we're trying to find that crystal ball. And so we keep looking at every new indicator, every email that we see, every webinar that pops up randomly, you know. And I mean, a lot of guys, I mean, you guys don't know, but I mean, we have people that are like testing stuff for sometimes 6 months before it's out in the public, you know? And it's not because we're holding it back, it's because we're making sure it works. You know, we've had orphaners for a long time. We're making sure it works. We put it out there. Okay, let me scroll back up. I know I've missed stuff. Let's see here. Let's see. I could make it that VAD-E at this foot. VAD-A wasn't shown. So, okay, y'all talking about NASDAQ. How far back is safe to look for divergence? Okay, that's a good question, John. Lord, how far back is safe to look for divergence? I was thinking if the previous trend was strong enough, then the divergence starting proceeded, it isn't reliable. Yeah, I will. I almost always look back on divergence. So, like right here, we got this long and this short right there. See that? Because that's really, I mean, if you think about it, that's what's going to happen, right? Like your volume's going to go real strong. Okay, now we're still in, it's going to add up the long and short volume here, right? Because it's in the short trend. But then also volume got really weak. Well, that's when I should sort of expect a turnaround. But I don't just want to hop in. I want to get confirmation. So when that confirmation happens, and it says, hey, we can go long now, you got yourself actually two short signals. We had double divergence. Buy. Look at that. I mean, that's a beautiful signal. Up, 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 up. So it's okay to, I mean, I wouldn't be like going like back here, you know, but I mean, you can look at any of the dips here in the previous trend, I guess would be the way to put it. So if we just turn long, you can look at the short and the most recent dips, divergences, like right, you know, the last like three. I guess what actually could be the rule if you want to have a rule, how I look at it. Does that help, John? Like you can look three dips back as long as they're within that previous trend. So in this case, like the trend was short, you could look at the last three shorts on VAD A when it flipped to VAD E. And by the way, if you're short and you haven't closed, that happened before I closed that because of MVP. But get a long position, get a long trade. It's a real good idea to close that short. Okay? Because that's next. Don't hold on to it because you want to be right. Okay? Let's see here. Yep, it was recorded, and Cameron already agreed that he would put it up in the THT section. Already up? What is today's date? Today, May 8th? There you go. It's up. There you go. You can also go to tfnn.mobi and you can hear the show. Let's see here. Back. I'm going to make sure I get everyone's questions. I try to cover everybody's questions. Sometimes I get them after they leave the room. Sometimes I get them while they're in the room. Packed and I kept it keep popping back up. Jason repost. We already covered that, so that's good. That Grant. What do we got, Grant? Let's see here. So you are buying contract, which looks like a wise decision. You have several reasons to buy. You bought at 56.47. Okay. Guess you're doing like an elevator, or what are you doing? What was your reason, Grant, for entering on that trade? Okay, so on VAD, let me go over a couple things. All right. Okay, so we had VAD went long here, but gave us a divergence here. So you had a VAD entry there, waiting for it to break out. That's your, I guess, your 56.47-ish entry. Is that right? Now your IZSS itself was long there, down at 56, about 43. Then you also had a little bit of an elevator breakout. So if you went there, then you have your stop at least at the swing low. If not, you could use the lines right here, your predictor arrows. We got a trigger price of 56.45. What time did you put it in? We need to have a record. We need to have it record. Let's see here. Hold on. Okay, so one thing I'm going to do is I just asked the programmers to add in the time right here when the order was submitted, like applied, okay, by the user, because that'll help us with determining things. If you put it in at 12:41, you tell me you put it in like over here, like 'cause this is 12:41. Okay, so what are you asking about? What did you do wrong? What do you trying to figure out why you got closed out? Are you trying to figure out why you got that fill? What are you trying to figure out? Well, if you're trolling the MVP, don't use the stop. I mean, just have it there. I guess you could adjust it over and over and over again. Well, this is your entry order. No, it's your sell order. Okay, trigger price 56.45. I don't have a time. That's what's killing me. So it got you out here? Yeah, I'd have to see a recording. Can you record it for me? Like next one you do? By the way, my favorite little program to record with is Benzinga. Makes really short videos. Like real, and it compresses them. I think it's free for like so many uses. You can also use this Nugget video thing. But your price offset is $10. That's probably it. You're telling it to put the stop $10 below the market price. Okay? I mean, we can work on rewording that if we need to, but what you're doing is you're saying 10. So if it goes up here and the price comes back $10, it's going to close out. So basically, you have like a 1 point, because remember, NASDAQ on Nadex ticks in point 0.1, right? So you'll have literally a 1 point trailing stop. Figure out that's the trail or the stop. That's just a stop. That's not even the trail, is it? You can't trail with the MVP. You would have to edit it because it's only for dollar amounts. So what you'd want to do is you'd want to set it and then adjust it. Are you saying, is this stop or trail stop? I'm sorry, I should have asked you that first, Grant. Okay, just a stop. Well, if you got in over here, I mean, it did hit 56.45 a few times here. But if you got triggered here, I don't see how that's possible. So I'm gonna give you a direct contact to me. Okay. you can send it to me. All right. All right. So I just need my direct contact, make a video of that happening randomly, and send that over to me. Now, the one thing that Austin had mentioned is how important it is. I'm not sure why. This is a newer thing. But to leave the scanner in the foreground, like don't have it behind a bunch of other tabs. Like if you want other tabs, like go open another Chrome. Let the scanner its own tab. Okay? So that caused some issues. That's I know one thing we figured out. And we're working on we have a whole second version of the scanner coming out. Like we're rewriting it from the ground up. Because it's got so much bigger, so much more use. So, as we've added more features and a lot more users, then you got to sort of rebuild it. But yeah, leave it in the foreground, and that I know helps. Here. All right, so we got a lorry chart here. VAD-A was much bigger than the previous VAD was, and it could not go higher. When it began to go back down, I took the scalp down for 10 ticks. Trip broke even. Let's see here. VAD-E, so we're going long. So let me grab my little, I like to have the snip thing so I can sort of draw on here. This is sort of cool. Just going through different trades with, I mean, these are new traders and these are vet traders that we're talking to right now and just catching up on stuff. Yeah. Let's see here. I only use VAD A and E, John. Okay, let's see here. VAD A was much bigger than the previous VAD. The scalp down. Okay, so I went shorts. All right. So we just went short here. Was much bigger than the previous. Oh, I can't see the previous VAD to that one. This one is a divergence, Lori. But we wouldn't know until this bar right here, which would have been a pretty bad entry. It's a massive chop. Let's see here, then it switches to long. And that's a tiny divergence. I don't know how you try to trade them with that small. See here. Again, I like 31260, but for my bad trades also. Anyway, so that right there would have been your long entry. Right here, also a C's entry. Out, stop at swing low. And that should have been profitable. So this one, I'm not quite sure where that entry came from because I can't see. I mean, maybe there was another big VAD over here. It's not on the screen. then your long entry, I mean, VAD's not a scalp. So I'm not sure why that trade. Sorry, I'm gonna scroll way back down. So yeah, Lori, that trade shouldn't have lost. If you're using VAD as your entry right here, this is your stop. And then you're trying with your predictors, and you're going to target something, most likely, in this case, being that entry, at least half your position at settlement. So that right there, like I said, I could see that would have been, that sucks. And then that, if you had another one before it. But you should have basically, you should have made some money, or at least broke even. But I guess I'm not right on this chart. Okay, so here you got start, each takes on scalp, so that'd be a scalp trade. Stopped out, takes a profit. Okay, so check. Swing breakout for 10 ticks on scalp, the trend entry stopped at break even. Don't use the word stopped out when you talk about profit. Like my trail was hit, or my take profit was hit, or my limit was hit. So profit, break even. You said long divergence, so what were you using as your entry? You went short on this trade? Like right here you went short? So you went against the VAD. Okay. Well, I mean, obviously you trade how you trade, Lori, and you do really well, so there's not a lot of correcting I can do. But what I would say is I really don't like trading against VAD. So VAD would have given you a very nice VAD long divergence. Because yeah, you had the like right there, you had that divergence right there, and then boom. Okay, well I'm just showing you there was a VAD E entry with the VAD, or VAD E long with the VAD A divergence. I don't know what long divergence you mean here, because that's long and the VAD A is doing that. So that would have brought you to a more profitable of a day. That one still would have lost. There was just no way around that. That was a good profit, break even. So if you could have kept that profit, broke even on that, and at least covered the loss on this completely, then would have been a nice day. But hey, now you've learned a couple things. Watch that VAD E. you're doing a bad trade. Let's see here, but cool. I don't get to review Lori's charts very often, so that was sort of cool. All right, Jeffrey. Thought about getting in for a long trade, but the VAD shows no good entry. Third bar on green push is shorter than third bar on previous push. Okay, one is Jeffrey. You need to add that. You need to upgrade your toolkit. You need to add VAD version 2 with A and E on it. Okay, you need both, not just one of them. Okay. So that's the first thing I'm going to tell you to do. If you want to make it real easy, use the Darrell IZSS template. But definitely at like VAD 2, okay, with A and E. And then just label them, change the labels. I showed this on the THTs from Monday and Tuesday. Okay, label them VAD A, VAD E. But like that would actually tell you this is a long divergence right there because that's going short. That's diverging, which means that it's saying the market's going to go up. So, and I'm assuming that we have the trend just starting to flip or, flipping right about here. So, my VAD. So thought about getting in for a long trade, but the VAD shows no good entry. So again, that is a good entry for a long trade because the short, remember, it's running down. All that volume tries to push down again. Very little volume. It's exhausted. It's what you call exhaustion, volume exhaustion. So when that exhaustion happens, that's usually when we get our turnarounds. Okay. And then you get a trend catcher, like boom, 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 boom. But it's got to break by 3 ticks. So probably did based on the price of that. Looks like it broke, or would have broke shortly thereafter. So I mean, yeah, that would have been a good trade. And then start with swing low. You could tighten it up to trend indicator right here, and then when MVP flips right about here, then you can start trailing with the predictor on up. Does that help out, Jeffrey? Sort of missed out what you're looking for on VAD. Hopefully you got it. I don't know if you're still here or at your computer, but okay. I'm still scrolling down trying to catch up. But all right, so Jeffrey, I got your question there. I hope you picked that up, but if you didn't, you'll catch it in the recording. So Jason said, yeah, we definitely move our stops to tighten risk. By saying use the MVP arrows and still use profit targets. I have a profit target usually for half my position, and then like MVP for the other half. Yes, I like the Siege chart itself. I think I look at the OP chart, Siege chart, and my IZSS chart, and I also have a 10-minute chart up with volume and deviations and where I plot my magnets and all that. NQ seems like it outruns spreads a lot. Are you ever going to address that? Is that ever going to be addressed? Okay, NQ is a very volatile instrument. They changed it from being a value of $1 a point to $1.1. Okay, it has a high volatility. Okay, one, make sure, Mike, or John, that you're always using the daily spreads near the market that is at least a 1-to-1 or better ratio. Okay, And two, understand that NASDAQ is the highest implied volatility of all of those four US indices. So if you're finding that you don't like using the, now again, daily near the market spread, then check out the other indices and trade those. But if you're using the intradays, you're always going to have premium issues trying to mirror the market. And I covered that in that video, Why Am I Losing on Spreads? Hedging post. Yes. Darrell has the assessed template. I would definitely highly recommend over anything else. And then instead of having the trendar overriding the color, I would have VAD override the color. A VAD entry, a valid VAD divergence entry override the color. All you gotta do is update to the newest toolkit and you'll have the template. What do you have using the diagnostic deviation for in your panel 2 on your template? Okay, that's to let me see a deviation from high to low. Okay, so let's say it goes down like negative 0.2 and up 0.8. See here if I can bring up the right chart. All right, so this black line right here is one deviation. Okay, and I want you to see something that's pretty freaking cool here. All right, so the question again is, why do I have this deviation indicator in my second panel here? It's measuring from the high to the low, low to the high. Okay, so from the high down, and we go to deviation. And let's check this out. Right here, from this high down to this low, right? See right there? That's a one deviation move. But you never see it if you're just looking at deviation lines. And then we had to take profit right there. And look, if this is a one deviation move, let's put a nice big line at that one deviation move because you can see it because that's right where it hits the one level, okay? Right. Oh, I'll give my marker again. Right. Look at all this volatility right around that one deviation move and in between that low price of the day. That's where all the accumulation happens again for them to take it on back up. So by me seeing that one deviation, which happened there also, it actually set the low from the high of the deviation right there. And the red is a deviation from the low to the high. The blue line is the highest point it's been all day. So the highest they got it was 1.27. But this lets me see when it's at a one deviation mark from high to low or low to high. So I can see a level right in the middle where nobody sees anything by using that one deviation. As soon as it hits that, go there, plot that price, and you now have an edge that no one else can see. But you know what can see it? Hedge fund computers. Does that help out, Kelly? Good question. It'll be like a bazillion article material right here. Rant. mad at you. So you would go long here instead of the trend catcher. Let's see here. Oh, instead of looking at instead, let's just look. See what we got. And use my magic marker skills. There we go. Okay, so we basically flipped over, and at this point we're sort of neutral to going long. Okay. And then we get a deviation right here, which is confirmed on this bar, which we can take an entry when it breaks by a few ticks. So that is a long, that's one long entry. Okay. Another long entry you could use is, okay, this confirms our trend, right? VAD confirms our trend. So I can use VAD to override bar color. Okay. So we get green on everything but the bar color there. Then we get the VAD. Boom, we can go long. There. Okay. And then we get okay,
New double bottom on NQ.
So once I got that arrow, and then that VAD turns green, I'm good to go. A VAD E. That's another way I could use. You say I could use VAD as in combination with trend catcher, because yeah, which I sort of I've already said I like to trade in the direction of VAD E, right? So could trade that one right there. So that's an entry here and an entry here. I mean, you're talking a few points difference. This one, the nice thing is you could have targeted taking off some profit right there at that settlement level, right? I need to look to see where, if there's any other levels, but I definitely, with all of them, would be trying with predictor right now, and you'd at least be locking in profit at this point, as of that one right there. I haven't looked at I haven't opened NQ to see what happens afterwards, but you would at least have locked in a break even to a profit depending upon which entry you took. Okay, Grant? How often do I get setups like that with the all the time? How would I explain the deviation level on my crude trade? Let me bring it up. I think I just did. Maybe you posted that afterwards. But. The deviation level is right here. Right? Our target was right here. Came through that deviation. Just bouncing right there. So it's either going to bounce and break through and keep going, or it's going to bounce and fly up. That's my stop right there. So it's literally going, what is a deviation? So if you like subtract the price of 47.21 from, I can't even read it right now, but I don't know, 45.22. Okay, that's a one deviation move. So that difference, it's looking for the percentage move of it from the high to the low and from the low to the high. Deviations are a measurement of probability of price containment. Okay? So a 3 deviation level, there is a 99.7% chance it will not surpass that. It will stay between it. Okay? At 2 deviation, there's a 95% chance it will stay between it. There's only a 5% chance it will surpass it. A 1 deviation level, and I'm giving you like round numbers, okay? There's basically it's a little less, but about a 70% chance it'll stay between it, and only a 30% chance it will surpass it. Okay? So knowing that, trades going beyond a deviation happens a lot less frequently. So very often we will see turnarounds on a deviation move. What is the dotted line on my seal chart? Do you mean like this one right here? What is the dotted line on my chart? In my panel 2? Oh, that's where it is right now. The current deviation is 0.739. Yeah, no problem. Yes, if it moves from plus 0.5 down to negative 0.5, that's a 1 deviation move. There's a 30% chance it'll exceed that. 60% chance it'll stay inside that area. I mean, it'll wobble around it, but as you can see. On your ISIS template for the MVP indicator, the offset volatile trend line, long short display, do you use that? And if so, how is it used? Okay, so I keep saying this, and I'm not trying to be rude at all. I want people to really hear it and remember. The videos I did the first week of May that are in the THT section, I actually talk about all of this. That is the MVP line. So make sure you go back and watch those. They're really, really, really valuable. I talk about the 4 things I look at every time I do a trade, and I actually teach you how to be a step ahead of the market. It's huge. Okay. Um, but the dash line is the MVP line, a minimum volatility predictor line. You have the predictor arrows, which are those little arrows, but there's also a predictor line. That line is my worst case stop loss. So if I want to give myself room to really see if something can move or have that ego thing where I really want to be right, or just the stupid things that we do as traders, whatever, you got to have like a stupid check, right? I mean, I have to have one at least. And so that's what MVP is for me. If a bar closes below that, I set a tick 3 ticks below it. If it hits that, I'm out. Okay. Now I may use a tighter stop. I may use the predictors. I may use a number of other things. But that's my worst case stop loss. You always need a worst case that no matter what your opinion is and no matter what you feel, you're going to stop it when that happens. There will be another signal to get back in if it goes the other way. Okay. But you got to have a cutoff point. So, by the way, if we do end up turning around and going short, I have a nice, look how weak that is so far. I have a very nice short setup. Do I still plot magnets from 10-minute charts? Yes, I do. Sometimes I'm better at it than others. I have been trying to figure out a way to automate it. It's one of my few remaining wish list things that I want done. Is the problem with automating it is when you get just the crazy volume, and then it throws it out, like it completely throws it off. So I think that's something we need to work on with Alex, Lori. Need to work on just trying to just at least as a first step, figuring out what a magnet volume bar is and plotting that just on the volume level, and then adding it to the bars is the second step. All bars that exceed this level are a magnet bar, that type thing. Okay, well, can you add that to the list? It's been on my list for like a year. But Lori's like, no, I've taken over your programmers, and this is what they're doing right now. How do I get black lines drawn in the deviation panel? Let me just indicator. Just add another one. Deviation. Okay. Have I ever drawn the daily spreads on my charts? Many, many, many times. See, I just added the indicator. And the black line for one deviation is there. I didn't do anything special. I just added it. Right click, deviation indicator. That's it. Okay. See, that black line's already there. Now, if it hasn't made it up to one deviation yet, like if you're at a market that's only moved like 0.3 or something, you may not see it yet. Do I set it up to do it automatically? I just grab the rectangle and draw it. So one of our goals for this year, which will probably be next year, but I'm always trying to push the envelope, is eventually to have like the Nadex spreads and binaries like feed directly into Ninja for trading. So we're working towards that. So first we got to rebuild the entire architecture of the scanner before we go to that step. Okay, is there anyone's questions that I have missed? Or any other questions that you have? Darrell IZSS, continuum bars, 31260. Darrell IZSS template, continuum bars, 31260. That's what I use. You can also load a 10 tick chart for the C stars template. And make sure you plot out your magnet levels on a 10-minute chart. And of course have a 10 tick order print chart up. Okay, I'll load up S&P for you. Any ideas on the market evaluation, the direction? I just follow the charts. I mean, I do have one way of like doing a full analysis, like what market specifically. It's pretty simple. Like the SPX or something, or what? NASDAQ? All right, while those are loading, I'll load this one up. I think my computer's having a heart attack right now because I'm loading a daily contract. What? Really? Where did all the ticks go? It's getting there. One more minute. I know it can take a while, but if it works, that's okay. There's plenty of platforms out there that are really fast, but they don't help you make money. What does it matter? Let's see here. Don't know why those IZSF charts. Yeah, it's funny how people are like, but they just get caught up in so many little things that they sort of miss some of the picture. I think it really is having a heart attack that I'm opening a daily contract. It's been a long time since I've opened a daily contract. Okay. You got all my little drawings here. Okay, so the question on ES for find it. Absorption is where I exit half because it may turn around. And then I trail my stop. Exhaustion is where I look for a reversal. Absorption is where everybody else is getting out. So that's where the big guys are getting in because other people are getting out. So yeah. Hold on. Let me focus on this question first. ES. Okay. So we're going to see if we have. Today we didn't really have any good divergences. I mean, we had one here, but it was like, I mean, it was Sunday night. Like it was, I mean, it's a great divergence, but that'd do any good if you're asleep, right? So they're right there. So it would have went short like at 3 a.m. this morning and just oscillated around. Would have came right down to ice. Man, ES is just flat today. But ES is honestly probably my least favorite to trade out of all the indices. But and the reason being, okay, is because it's the most heavily traded of like the most traded one is the Kospi out of South Korea, which is very hard to get access to because it used to be illegal for us to trade it. Now it's legal, but most of the brokers just never got around to adding it since it wasn't. So, but the most actively traded contract in the U.S. is the S&P. So you have so many people hitting buttons on this contract that it makes it, I guess, just less predictable, more choppy. It's insanely liquid because everybody's putting orders in, but it's just, eh, like it's not. I mean, look, think about the other charts we've looked at today. Compared to ES. So that's just my 2 cents on ES. It doesn't mean you can't trade it. Doesn't mean I don't ever trade it. It just means not a massive fan. So that would have been a long if it would have broke the high there because we also had a little divergence there. But it didn't break by 3 ticks, so no entry, and that's good because I would have lost. We get a short, but there's no divergence. So today, yeah, I mean, there wasn't much at all. We go back. Get along there. We finally, I mean, it took a while, but this is Friday. And you would have to wait until that E flipped, so you would have got to ride it pretty much to the end of the day. So which would have started right there. Probably not doing after hours trading, so we'll say right there. So you would have got 6 points at $50 a point, $300. It has a $300 VAD trade for you. Just looking at VAD for you on that one. So if we look at this from another standpoint, like from IZSS or whatever, I mean, it's just sort of chippy going on, but let's just say normal trading hours. We're looking for something. We're not even getting a short there. Nothing happening. It's not breaking lows by 3 ticks. And basically, that entry would have been like the only entry you would really good entry could have taken on ES using that chart. Let's see here, using this one, besides the ones we already pointed out. I mean, that's a short one that you could take. But, I mean, it would have, unless you were scalping it, it would have been break even at best with a small loss. If we take ES over to C's, then which is going to have even less bars because it's going to be smoother because it's diagnostic bars. And we're just about to get an entry to go for a big long. Now Friday had a nice long on the E right there, about the same time, 1449. Yep, about the exact same time that we had the VAD entry on the other chart, which is sort of nice. When you see a couple entries on a couple different charts, you go long right there, and that one could have been would have ridden up to the end of the day. Nice profitable trade. That's the apex entry. Potential apex entry. I mean, it's a reversal apex. Trying to see if there's anything else that I'm seeing that would. Yeah, I mean, it's just a really flat chart. So I see what you're saying. Like I said, I haven't looked at it a lot lately because it's not my favorite because it's so blah. But yeah, if you want to get some more action, move over to NASDAQ and Russell. Even Dow's better, but NASDAQ and Russell. Like some people trade ES because it's so popular, it's taught by so many people. But most people who really trade it, they're in and they're out like for a few scalps. Because I mean, it's $12.50 a tick, so that covers commissions like, and just a tick will cover commissions and net a profit. So, like that's a lot of times why people will use it. But like I said, it's not my favorite. Oh yeah, Neto trades it. I've traded ES on Neto's account. I sat there and I made him a couple grand, and then he took me to lunch. That was my payment when he was helping train me. But yeah, he trades some either big positions or he's in there like scalp, 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 scalp. He'll take a long view, that type thing. He's not in there. You know, it's a little bit different. It's a totally different type of trading. So he helped me see how the market gets moved around, how it works, and that's where a lot of our patterns and stuff came from. To help y'all see that. Cost a couple grand a day for 5 days to sit down with that guy. But he's cool. Are the indium instruments you trade in the evening hours? I don't trade a lot at night, usually because I'm out riding horses. um, but when I do trade, again, a lot of times I will look at like I'm going for shorter moves. Usually, I'm usually targeting. I'm not trailing. Okay. Um, and I'm gonna have more charts open because I'm gonna look for what's moving. I'm gonna be very aware of news because that's gonna help me get my little pops to get my 10 and 20 ticks. Oil is actually decent at night. Nasdaq is actually decent at night. A lot of people never think about trading those. Gold is good, but it's very light in liquidity. So, you know, just don't go do 10 or 20 contracts um, in the evening. And of course, you got your FX pairs like, you know, pound yen. Aussie New Zealand is very, you know, it's great. They're working on getting New Zealand pairs added in the Nadex. I can't wait till they do because I love the New Zealand pairs. Um,
New double top on MQ.
Yeah, ES. I mean, it's one of those like it's a great contract because it's super. I'm gonna close this thing. It's not opening. This other chart I was trying to get running. Let's try again. But it's not. There's not the volatility because you have so many buyers and so many sellers on the exact same contract. that at a certain, like TF was my favorite for a long time. Like it's all I touched. And I also like, so I like, I like Russell. Nasdaq has been a big favorite lately, but I mean, I'm not very loyal. Like I'll leave an instrument in a heartbeat and go to another one. As far as that goes. But I'm looking for what moves. And if the S&P's moving, I mean, it can move nice and smooth. It can be great. But if it's not moving, the movements are so smooth, you have like no entries. And so all you're gonna do is go in there and like grab a few ticks, out, grab a few ticks, out, grab a few ticks, out. Nasdaq chart up. Okay, so here's daily Nasdaq. First indicator I ever wrote. I still love it. Apex volatile trend line. Let's see what the settings are in here. Five and a 1.5. There we go. So, to answer your question, Mike, were you asking about long-term views? Yes. Um, this is the apex volatile trend line on a daily chart is my favorite trailing indicator. On a daily chart. Okay? So like if I'm say managing a 401k, my 401k type thing, okay? I mean, I've cashed all mine out, but because it's just a waste of money. But if I had money in a 401k and I couldn't get it out, I like this is one of my like I said one of my favorite ways to do it because I can go in, I can trail it, I can trail it, I can trail it. You don't get a signal that often, right? So, and what I'd look for is I'd look for a close. This would be a big piece, especially mutual funds being about closes, right? A close below the line, not just touching the line, because I mean you're not trading intraday anyway. Okay. So if we looked at just say 2017, let me add on my where is it at? Where is the yeah, so many little things, sometimes it's hard to find exactly what you want. There we go. Toolbar shortcut. All right, so this closed below the line, so like right at the end of the year. Okay, so that would have put me like out. Okay. And then we got to close above it. It turned green. So I'm in the next day. Okay. So we're trailing, 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 in. Finally, okay, over here, out. Go over here, finally closes above. So I'm in on this day. Taking a little bit of a hit right there. And then back in. Right there. Okay, so that would be, and I mean, so if you think about that, what did we really do? Because I know like 401ks are all picky about what you do, right? As far as the year of 2017, we had an exit, an entry, an exit, and an entry. So we had like four, I guess. So like 2 exits. They're always about the entries, but 2 exits in the year so far. And didn't really help us much there. We actually took a little bit, but it was chop. And then we finally hopped back in when the chop was over, and then we took it. So, and you go back and you can look at some pretty crazy stuff. One of the other things that I'll do is I actually will look for, basically think apex pattern, okay? But I will trail it. It's not really the one I wanted, but like 2 back. So let's say like that's a pullback right there, okay? And then that's a pullback, that's a pullback. So really you're talking about the third one back. So now as soon as we get another pullback, I'd move my stop up here. And then, so now we're looking for another pullback. Got one there. I mean, this is really a very loose stop, but again, if you want to really keep it light on 401ks. So we got 1, we got 2, 3, okay, 4. That's going to bring it up to there. Okay. 1, 2, 3, 4. That's going to give me a new pullback level right here. And then as soon as we get another one, let's see here. Right there. So that's going to pull it up to here. If we get another pullback, that'll pull it up to there. So that actually has no exits so far, and it's just showing it up by going back to pullbacks. So very simple method. I didn't require anything. Volatile trend line combined with it helps you sort of see the trend. So, and then basically what I used to do, I'd do that, and then I'd make it. Basically, have to have 2 pullbacks down before I would take a re-entry on the way back up. So, like I basically think of a reverse apex, like a short apex. So if it actually did hit my trailing stop, then I'd want it to have, like in the volatile trend line, of course, is going down. I'd make it actually like basically do 2 short apexes before I'd hop back in. Yep, and then I trail it every new pullback. Trail it, trail it, trail it, trail it, trail it. Because that gives it lots and lots of room. Now that's all the data it's going to give me. Is last year's. And we can go here and we can say, let's say, okay, now we got a long entry. So obviously that's stop. And then it pulls back. I mean, basically you just mark your pullbacks. Anytime there's a, there we go, a lower high. You get several of those. So that would have put you out right there. Right? And then when it closes back above it, which is sort of nice because it puts you out here and then the market crashes. It's green, closes back above, you get in. So now you delete all your levels. You go to drawing tools and delete, 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 delete. Where is the delete? Is it at the bottom? Yep. That's something in the way. now that we're back in, like right there, you have that as your stop. Then pull back, finally hits a new high right there. That closes below, you're out. So as you get in and out for the same spot. And then it's doing its thing, trying to close above, but still haven't got the volatile trend line above. So now we have one pullback. There. Okay, so now we get to get back in. And it's, I don't know, this is pretty much how I play it when I used to. Back when I had a 401k. And then we go, and it gets out like we said earlier, and then it gets back in for the new year. So I mean, it got out a couple times last year. This year, technically, if you would have been doing everything with it, it would have got pulled out. I'm marking the bottom of the bars after the pullback is broken out of the high. So like on an apex pattern, if we threw apex on here, which really is the easiest probably way to see them. So every time like there's a high, see like right there where the P's are, I'm basically marking P's. Let's see, I missed one. There. So apex is a very good way to help you find those. But see, that would have got you out. And you wait for it to turn green and close up and all this stuff. So, I mean, that's just a couple things. I could go back and pull all my old notes out and help catch you up on it if you're interested. If that would be something that y'all would enjoy. I mean, it's a little more boring, but it's a helpful method for helping manage accounts that you can't really trade, you know. But I mean, I've used this before to tell my mom like go flat, go into cash bonds or whatever on your account, because you know she's retired, she's disabled, and I actually told her to go flat the day before the flash crash. That was pretty cool. She's like, thank you. But yeah, if y'all would like to see, yeah, if a daily thing would help y'all, just to see a daily outlook or a way to help manage like a, you know, to self manage. Obviously, I'm not gonna tell you what to do, but a way that you could, you know, help run your like sort of retirement accounts. I'd be happy to do like a lesson on that. Advice, John. Don't quote me as advice because I'm not an advisor. I'm not allowed to advise. Tips, education. But yeah, I could pull out my old notes. I just have to pull them up. I'll do that one day this week. I'll find them and I'll tell you exactly how it, because I actually had an exact ABC method that I used. Yeah, you can put daily magnets on. Daily magnets are big. You can do that too for big levels. And of course, I mean, the other day we were trading, we were looking at like where would Nasdaq go next if it broke a level, and we had to pull up a daily chart just because it had been going up, up, up so much. You know, we were like literally, I mean, it was down here. You know. All right, I'll work on putting that together for y'all. Cool. All right, we all have. I think I got everybody's questions. I'm gonna give you a one last chance. Probably should, but I'm going to. you got any more questions, bring them with you tomorrow, okay? All right, thank y'all for being in the room today, and I will see y'all tomorrow.